All right, we should be live. Hey, everyone. Welcome to another episode of Trading the Markets. I am your host, Vays. Coming to you live as the markets have just opened. Ran a smidge late this morning because I do want to come back to spaces. I really enjoy spaces. Man, they make life so much easier. So let's go straight to the charts. There is something I want to cover today. Hopefully I don't get sidetracked. Hope you all enjoyed yesterday's guest. That was my second time ever chatting with Tom Luongo. I ran into him on Spaces. It was shout out to Green Candle, who hosted Spaces on a Tuesday night a couple of nights ago. And Tom was his featured guest, and I thought he was interesting. So I said, hey, why not get him on the show? And I've heard him once or twice before on YouTube. Definitely some commentary. Let's hope some of his colorful language doesn't get me banned on YouTube. But that was a fun conversation. Definitely a very charismatic, passionate guy. And the comments to the stream are kind of funny because usually, here's what my comment section is like when I have a guest. Tone, stop interrupting your guest. Tone, why are you not letting your guest speak? This time, I didn't get a chance to interrupt. And now the comments are, Tone, the guy just went on and on. Why didn't you interrupt, right? So it's, can't please both sides. And I do try to let my guests speak now. I try to interrupt them as least as possible. Though in this case, it wasn't even possible. I had a good time. I hope you guys enjoyed it as well. Credit Suisse. Yeah, we can go and take a look at the chart. Okay. I'm going to go through my view on the price real quick because I want to talk about something else after, about the price of Bitcoin. So the weekly chart, at the moment, our weekly candle is not breaking two of the three resistance levels. I am very, very, very confident that we will break the 50-week moving average when this week ends. Today is Wednesday, I think. What the hell's today? Today is Wednesday. I'm pretty confident we're going to break the 50-period moving average. Are we going to break the 200-period moving average and the MRI resistance line, both at 25,000? It would be nice if we closed above 25,000, but we don't have to. We already established a new swing high on a weekly candle. We are currently establishing a new weekly close on the candle. It does not matter if we close above or below 25. It is all the same. A close between 24.5 and 26.5 are identical to each other. They make absolutely no difference to me whatsoever. Because even if we don't break above both of these areas of resistance, I have very high confidence that we will break them next candle. And if it's not next candle, then it's the candle after that. I am super confident that this is the secondary low. We're not going to go below this low to the downside, other than some crazy event like another COVID situation or some kind of a major hack or some kind of a major exchange going down. There has to be some kind of a black swan event that you can't really predict, okay? Now, Bitcoin is probably slumping a little bit this morning because the S&P was slumping a lot this morning, but it's already rebounded. Wow. 5 minutes ago, this thing was all the way down at the lows at 38.30, and now we're almost at 39. So that's interesting. Let's see what happens at 10 a.m. I don't really want to see a 10 a.m. reversal to the downside. I want to see the S&P go back up. The S&P daily chart and weekly chart. Well, the weekly chart is just at a critical level. The weekly chart in the S&P is at a critical level, and it needs to immediately, get back above 4,000. The daily level looks a lot worse than the weekly level because the daily level will have monster resistance at 4,000. Well, so will the weekly. But 4,000 has just become a resistance. But if we get to it very, very quickly, the more time goes by, the harder it will be to break 4,000. But if we get back there later this week or early next week, it's not going to be formidable resistance. But if we fall a bit more and then try to challenge 4,000, it is going to be formidable resistance for the S&P. But Bitcoin is rising because of what's happening right now. That's the part I'm going to talk about next. Let's just go through the markets real quick. The allocation chart is currently 100% bullish. And while the short-term moving average is technically not above the intermediate-term moving average at the moment, as long as we hold these levels, it will be above it next candle. And I'm already preparing for next candle. The daily chart looks great. We are still far away from an MRI sell, an MRI top. That's coming sometime mid next week or early next week. You can see the moving averages are going to cross over in a couple of days with the 128 going above the 200-day. A lot of people are pointing to the broadening wedge. It's not concerning to me for several reasons. One, I know Tyler Jenks had videos on a broadening wedge. The broadening wedge, I mean, yes, if you use the tips of candles, you can draw it. I'm not scared. It's not scaring me. It's not scaring me that we're going to go from the top of the broadening wedge to the bottom of the broadening wedge. I think the probability of that is very, very low. Not scaring me. I'm aware of it, but I'm just not scared of it. Could this be the beginning of a new bull market in crypto? Well, I don't know about crypto, but I believe it's the beginning of a new bull market in Bitcoin. You can look at crypto charts and make your own decisions. This is why I only look at Bitcoin charts. Short-term scale. I drew one of these things yesterday. You know, I expected a bit of a pullback. It's not bad that we pulled back literally to the area of prior breakout. Absolutely perfect. Look at that. If I use the best fit line between all of these candles, it looks incredible. I expected a bit of a pullback, maybe not all the way to this line, though it's nice that we went all the way to this line. And so if I take this and I just, slide it down a smidge, looks great. Still looks great. My outlook is that we close around 25K. Whether it's $100 above or $100 below, to me is irrelevant, like I just stated. You see, there is a time and place for everything. There are times where you close at the 200-day moving average and you see, or week moving average, and you see it as resistance. But then there are times where you close at the 200-week moving average and you see it as completely meaningless and on the verge of breaking. To me, this 200 moving average is on the verge of breaking for multiple reasons. Bitcoin fundamentals, Bitcoin on-chain analysis, Bitcoin cycle analysis, which is time to halving, and the TA picture itself. All four things are lining up. They're all lining up. Will my top before the halving? Probably. Again, I have two scenarios that I am looking at for the next 3 years. And these are the scenarios. We top before the halving at approximately triple top and then we go down into the halving, or we slowly grind up into the halving and then go up after. Is it possible that this 60,000 is closer to 75,000? Yeah, before the halving, yeah, it's possible. I don't think it'll be 100, but it's also possible we don't even get to 50K before the halving. We get stuck in that, you know, $35,000 to $45,000 range. But I don't think we're going to go back to the lows. I think those days are gone. Let me look at some traditional markets. I heard oil was dropping this morning. Grayscale, GBTC. Like I said, I am very surprised that the discount is not lessening. Oil is dropping this morning. It's not pretty. We have to wait till the weekly candle is over, but this is very disappointing for me. Is it possible I've been wrong on oil? It's possible. It's not the first time I've been wrong on something. I find this also very surprising. I think the data comes out next week, or sorry, tomorrow. I think the data comes out tomorrow. We have the March 3rd data. We need the March 10th data. And I think that comes out tomorrow. So, yeah, we'll see. Well, it already came out, but it gets published to the website tomorrow. Maybe they used a bunch of strategic reserve. I don't know. But no more cards, guys. No more cards left, unfortunately. I didn't get my card. I didn't get my Tone Vays card. That's the allocation chart. We already covered that. Yeah, I don't like this candle. If I wasn't any bullish trades on oil, I would be exiting those now. I think oil has it can't go down too much. But if I didn't know this was oil, if I did not have a bias towards a bullish oil, this TA picture right here is horrible. It's really bad. Like over here, it was also bad. Like this red star candle right here was bad because it created that new low. Though you didn't go down much, so you didn't lose anything on that trade. If you were long on this candle, then it didn't matter because you spent like how many months? Like 3 months at the same exact price. But this candle, I don't like it. I don't like it at all. And you're close to breaking the MRI support line. So this is not good for Russia. Low oil prices are not good for Russia. I mean, it's not good for any oil producing country, but especially one that's in the middle of a military conflict. So that hurts Russia for sure. Natural gas, well, similar picture, but natural gas at least is still way off the lows. But oil is making new lows. We'll see how it resolves over the next few weeks. All right, I got spaces starting in a few minutes. Gold is popping big time. Silver is rising as well. Again, I would prefer gold. There's a reason why I got rid of silver, but I didn't get rid of the gold. I think gold will go to a new all-time high. And I don't think silver will go to a new all-time high anytime soon. I mean, silver is still 50% off the high. The high was 50 back here somewhere. Oh, it's a daily chart. Like the high on silver was 50 back in 1980, and it was 50 again in 2011, and it will be 50 again sometime by 2029. But gold's going to be like 8,000-9,000 by then. Like silver, I know a lot of people think that silver is going to catch up to gold, and that's why it's so behind, but I don't see it that way. I don't see it that way. See, gold was 50% higher than its prior all-time high in 2011. So the all-time high for gold was 800. The all-time high for gold here was like 1900. So gold was more than 100x from this level. So the next gold all-time high is very likely to be 100x from this level, which makes gold to be around 4,000. So I don't know when that high is going to be. It could be next year. It could be in 5 years. But the next time gold hits a new high of, say, 4,000, doubling its prior all-time high, silver will be lucky to be back at 50. So it'll make 100x from here as well, but it'll still be at 50. And then gold will pull back from 4,000 to 2,000. Silver will pull back to $20. And then gold will make a new high at like 8,000. And silver will maybe make it back to 50. Like, that's my outlook on silver. It just doesn't have the upside. Uh, 10 a.m.'s coming. Let's see what the stocks are doing. Yeah, 100%. Sorry, not 100x. One-minute chart on the S&P. Yeah, we went up at the open. Okay, so we didn't. Yeah, we went up at the open. We reversed at 945. I wouldn't put too much read on the MRI on a 1-minute scale, though we did top on a warning candle. And now we're having a oh, am I a few minutes behind? Why is this 954? Oh, it says S&P cash. I really thought this was in real time, but it's not. I'm 5 minutes behind, guys. I'm 5 minutes behind. There used to be real-time data here, but I don't have it right now. Litecoin is at the halving. Yeah, this might be the I think one more halving for Litecoin and it dies. Litecoin can't sustain halvings. This is the thing that I need to discuss with Tom Luongo. I know he said he's been in this space since 2010. I didn't want to start a giant argument. But as you guys know, I'm always skeptical. Real quick on Litecoin. I do want to look at currencies, though. I mean, currencies must be going through some major havoc. Still bullish on the dollar. Oh, yeah, look at the dollar rise. Bearish on the euro. Look at the euro fall. If you go to shitcoins, if you look at Litecoin, this could be a long discussion. So, what is Litecoin having? Is it today? Did it take place already? I don't want to start Googling Litecoin. I don't want to get advertisements for Litecoin through Google. Yeah, it'll avoid being classified as a security until it removes proof of work. And it will remove proof of work. Am I planning to visit Osaka and Tokyo? Yes, I am. I am planning on it, but I still got to talk to the conference. There's two problems. One problem is that the Tokyo event is at the same time as the Miami Bitcoin event. And the other problem is I want them to cover some of my expenses. I'm sick and tired of paying my own way to go and speak at these conferences. So unless they're covering, at a minimum, you cover my expenses to get there. I'm tired of spending my own money. You can ask me again when Bitcoin is at an all-time high. But until Bitcoin is at an all-time high, if someone wants me to fly across the world to speak at their event, at the very least, I expect them to cover my flight and hotel. I don't think that's too much to ask for. I used to do it at my own expense. I just don't do it anymore. Business wasn't great in 2022 with the big downturn. So there's only so much money I'm willing to spend on traveling to your event. So let's assume Litecoin just had a halving. The problem is, let's go back 4 years. Litecoin halves every 4 years. The current price of Litecoin is, let's go to dollars. We'll do it in dollar terms. The current price of Litecoin is $80. Let's go back 4 years. Is this in months? It's in months. Wow, that's a light green. Let's make this darker. Actually, why is it even green? So, oh, I can't see anything. 35 bars. So $12 a year, 4 years. That is 48 bars. So 48 bars ago, Litecoin was $64. And you were lucky because it was coming off the low. Okay. So 4 years goes by, and Litecoin right now is barely above those prices. Absolutely barely above those prices. Okay. If the halving was a month from now, it would have been below the price that it was 4 years ago. So if miners are getting half the reward, but the price has not changed or the price has gone down, how much more effort will there be to mine more Litecoin? Oh, halving is 140 days away. Okay. Okay, well, let's assume it just happened. So Litecoin is at best. The price of Litecoin has not changed in 4 years. And it spent a lot of time below this price, and it spent equal amount of time above the price. Now, when it did go above the price, it went way above the price. Okay. I don't think this is going to happen again. So what happens 4 years from now? 4 years from now, Litecoin is likely to still be at $100. It's not going to go up. But every time there is a halving, there is less and less incentive to mine Litecoin because the price of Litecoin is not going to be able to keep up with the halvings. The price has to more than double in order to increase the security of your shitcoin. And that is why Litecoin is going to go into a mining death spiral, where its mining structure will just have no security. Its proof of work will be like the proof of work for Litecoin is going to start to become a danger to the project instead of adding security to the project. This is what happened with Doge. The mining of Doge became a security risk for Doge because the price of Doge was not profitable enough to mine Doge anymore. And no one needs Doge. No one needs Litecoin. That's the difference. People need Bitcoin. Imagine if Bitcoin disappeared, how many companies would die? Publicly traded companies. How many mining operations would die? Billion-dollar companies would die. If Litecoin disappears, name me $1 billion company that depends on Litecoin so much that they're willing to spend hundreds of millions of dollars to make sure it doesn't happen. There isn't one. There is no billion-dollar company that is dependent on Litecoin's existence. And there is many of them in Bitcoin. Many billion-dollar companies dependent on Bitcoin's survival. Not to mention billionaires dependent on Bitcoin's survival. they will defend Bitcoin. They will defend Bitcoin mining. No one is going to defend Litecoin mining. No one is going to mine Litecoin at a loss. And this is why Litecoin's proof of work becomes its downfall. Just like in Ethereum, its proof of work becomes its downfall. And they have to, and because it's centralized development, they will eliminate Litecoin mining. They will either merge mine it with a stronger coin, and in the case of Litecoin, it has to be Bitcoin. They will merge mine it with Bitcoin. And I don't want to hear anyone say, oh, but they're on different algorithm. One is SHA-256 and the other is Script. And my answer is, who the hell cares? There's one developer at Litecoin, and he'll just change the damn code. And everyone is going to upgrade it. So yes, I can make the argument that Litecoin is a security. Litecoin's only use case is to suck in Bitcoin from uneducated people. What if Tether collapses, Bitcoin price skyrockets? You just saw it. Circle had problems and Bitcoin price went up. Because if Tether starts to collapse, where are Tether users going to run to? They're going to run to the safety of Bitcoin. If Binance collapses, it's trickier. I can definitely see a Bitcoin crash. What do I think about Zcash or Monero? Same exact thing I think about Litecoin. Their privacy advantages over Bitcoin are grossly overrated, and they give you very little additional privacy on top of Bitcoin. And if you're using Bitcoin on the liquid side chain, the privacy of Monero and Zcash give you zero additional privacy over liquid Bitcoin. And the mining of those coins is very soon will be a potential risk to the coins because there's just not enough mining demand for it. And the currency volatility of those coins makes them not great options. Okay, let me talk about what I wanted to discuss, and then I want to join Spaces. So what I wanted to discuss is, if I go back to the long-term picture, the long-term monthly chart. I'm going to use the monthly chart. Maybe I should switch to the weekly. And hopefully my memory is good. We'll leave the MRI. Maybe I'll leave the moving averages. Whoa, they are thick moving averages. Let me drop the thickness on the moving averages a smidge. Oh, do I have to do it one by one? Shit. Oh, this is triple MA forecast. Okay, I have another one. I'm going to drop this one because I have my own. That's no. Okay, hold on. Moving average forecast right here. I guess I never published it. Okay. And what are my defaults here? Daily 20, 50, 200. Weekly, they're different. Now I'm going to go with 20, 50, 200. I'm going to go traditional. I'm just going to do 20, 50, 200 on both. Daily and weekly. Okay. Yeah, I like this better. So what I said the other day, and I'll probably be tweeting this out, I'm going to circle the current situation. The current situation, I am incredibly bullish on Bitcoin. And I'm going to go through the history of my analysis in Bitcoin and show you the other times I've been as bullish on Bitcoin as right now. And it wasn't here. This is a nice, beautiful candle off the bottom. But I was not as bullish on Bitcoin on this candle as I am on this candle. Not even close. Okay. For multiple reasons. I'm not going to get into them. I'm never bullish off a consolidated bottom. That's not where I become bullish. Okay. Because here, I'm very concerned for another leg down. So I can't be bullish on this candle. So we go back further. I was bullish off of this low, but not as bullish because there was still concerns and room to the downside. And if you guys go back to my videos, yes, I was bullish. I took kind of bullish trade, but the moving average structure would not have let me be ecstatic about the price of Bitcoin. Now, we are going backwards here, right? So I will say the one time that I wasn't wrong, but right here, since we are going backwards, right here on this candle, I was incredibly bullish. You know what? I'm going to make these white. Hope you guys can see that. Just better. And I want to make this green. Green and light green. I was incredibly bullish here, and I'll explain why. Break of moving averages. Approaching prior high, near prior high, established significant low. Okay, I am incredibly bullish on this candle. Obviously, as I've stated many times, I expected us to go noticeably higher, at least 75, possibly even 80. You know, I still got a decent run off of this high. You know, we went up 30%, but I expected more. Okay. Next, I was pretty bullish here, but not as bullish as I was here. Okay. And the reason why I wasn't as bullish here is because, again, we were bouncing from a consolidated low. Yes, it's great that we bounced off the moving average, but I did not like this consolidated low, and I was very bearish on the 2 prior weeks. So I'm not gonna, you know, lie to you guys now and say that I was crazy bullish. If you go back to the day, this day of this video, you can say, Tone, you were super bullish here, and I will say, wow, I guess I was. But I don't believe that I would have been super bullish here. I'm giving myself the benefit of the, like, maybe I'm being over pessimistic on my own view. Now, the prior time I was crazy bullish, and I am confident in this, would have been right here. If I wasn't, then I'm an idiot. I should have been crazy bullish right here. Why? I'm gonna put a label in. Why was I super bullish right here? Breakout of critical prior swing high. And not only was it a prior swing high, it was a consolidation. Swing high / consolidation. So it was a swing high a year earlier, and there was a consolidation for a year, unable to break that level. It's that $10,000 to $12,000 level. Okay. The moving average picture was very bullish as it gets. Again, moving averages, or I should put consensio, but I can never spell that right, so I'm just putting moving averages. Okay, and I saw this as a final move above that $10,000 level. Okay, leaving 10K for good. So I'm just pointing out the areas. I am as bullish today as I have been or would have been at these areas. Yeah, maybe those two things could be different. Breakout of consolidation, breakout above prior swing high. Now I know there was a swing high back here, but this swing high was too far away. This swing high was just as strong for this breakout as this swing high would have been had we not fallen so much and broke it sooner. But to me, this was good enough. And I had, 90% confidence that once we broke this area, this was not going to be resistance at all. We're just going to blow through it. Okay. And I was bullish all the way through, pretty much. Like, I don't remember being pessimistic at any point. I'm always bullish on a new high. So eventually I'll be wrong, but I was right every single day for like a year. Now, where else was I super bullish? And tweets prove this one. Unlike bouncing off this low, where I would have been hesitant, or bouncing off of the low here in January, where I would have been hesitant, or I was hesitant, I remember. That was not that long ago. And I don't do a lot of drugs, so my memory is pretty good. And that was me being sarcastic. I actually don't do any drugs. Right here, I was super bullish right here, and tweets prove it. And I purposely put the circle a little bit to the right. Okay? Tweets prove this. I called this as well as anyone. Again, why was I bullish here? Well, I was bullish here because we did not consolidate at the low. No consolidation at the low. Major unexpected crash. Major black swan event that forced liquidations. Like massively, like hedge funds going down liquidations. Okay. Held moving average. Strong bounce. Now let's go further. I was not crazy bullish here. I was cautious. I was not crazy bullish here. I was cautious. I would have needed it to break the swing high, which we never did here nor here. Now comes the tricky one. I was a little bit bullish here, but I was always borderline cautious. So I'm not going to make it green. I was bullish here. Everyone was making fun of me for being late to the train. Around this green star candle, I'm going to go with this candle. And I'm going to make this yellow. I'm not going to make it green. So I was bullish, but I was disappointedly bullish. Like, I was forced to be bullish. I didn't want to be bullish, but I was forced to be bullish by the market. And I'll make it yellow. Now, why? Again, continued strength. Strength. I think that's how you spell it. I have no idea. I can't spell to save my life. Like, and I mean that. Like, if there was if 10 people were like lined up and it's like, hey, whoever spells the first word wrong dies, it's going to be me. I am actually educationally dyslexic when it comes to spelling. And I mean, the MRI helped. Break moving averages. There were a few reasons, but I was always cautious. And this bullishness, and the reason why it's yellow, or orange, whatever, is because there was always an MRI top brewing around the corner. There was always an MRI top around the corner. So I will put it down. Tyler Jenks and I were doing videos. Ugly Old Goat and I were doing videos. Ugly Old Goat and I called the top here almost to the day. I was very cautious on this. This is where I was like, okay, fine, I'm bullish here, but I'm not bullish here anymore. And then I became bullish here on the green star candle, and then it got out of control and backwardation started. So I was bearish again. Like I was just flipping back and forth here, bullish, bearish, bullish, bearish. So I will throw a little orange thing, but it's not like the green ones. Obviously, I was a super bear right here, but we're not talking about when I was bearish, we're talking about when I was bullish. And maybe I should have been a little more bullish over here off the moving average, but this structure did not make me bullish. And the moment we broke out of the structure, it happened to be an MRI sell. So I could not have been bullish on this candle. The only time I could have been bullish on this run-up is here, and then again here. But here I would have been concerned because we're going up too far too fast with no pullback. So this was a very hard time for me to navigate. Now, when else was I as bullish as I am right now? Well, all through this run-up. I was incredibly, I'm just going to copy this. I hope this isn't boring for you guys. Well, we're just going backwards. I was super bullish right here. I was bullish right off the low as well. There was a famous tweet of me saying, like, buy this right at 3K, literally to the penny. And Max Kaiser replied to that tweet. You know what? I can show it to you. I can show you guys that I'm not bullshitting. Hold on. Pictures. Oh, it was in my presentation. Hold on. Let's show pictures from presentations. Technical analysis or investing? Technical analysis. It's got to be here somewhere. Hold on. Come on, come on, come on, come on. It's got to be that tweet. Too bad. Struggling to find it. What is this? No, that's not it. That's not it. Damn, too bad. Would have been nice to pull that up. Is it in this bubble presentation? No. Well, one more shot. Hold on. BTC, USD, charts. Tweeted out so many charts over the years. I can Google for the tweet. And try that. I spelled Kaiser right. I always forget if it's gonna do max BTC USD. $3,000. Is that the tweet? Go to live Twitter. No, that was way later. Sorry, guys. I can't find it. I don't want to waste too much time. It would have been super cool for me to pull that tweet up. Really cool. Really thought it would be in my slide, in my slides, but that's just. Oh wait. I think I'm onto something here. Hold on. Found another folder. Let me make extra large icons. Maybe it's here. Oh wow. That's way too many pictures. Nope. Nope. Oh well, too bad. Anyway, I was bullish right here at 3,000, but I'm only gonna point to this circle here. And I want to get the green thing. Well, again, what are the reasons? We're breaking all-time high. Moving averages. Again, notice the theme here. Notice the moving average theme. Moving averages, all rising. All rising. Strong bounce off support. Break to new all-time high. And that's on top of me being bullish at the $3,000 low. And the $3,000 low was great because that's where it topped. And I called this top as well. You can also see the MRI on both of them. Now, right here, I was also bullish, but on a daily scale. There's tweets that prove that as well. There's tweets at this time. If you go to my Twitter feed, you'll see it. So, but I was mostly bullish here for the same exact reasons. I can duplicate this. Bam. Now, this was my favorite. And by the way, this here, this is where SegWit happened. This is where I was so bullish on SegWit. It might have been here, actually. I think it was actually here. Sorry. This is where there was confidence that SegWit was going to get in. This is another area where I was ridiculously bullish. Right here. Now, again, notice the theme. There's a green star candle. We're breaking above prior swing high. We're coming off support. Again, it's identical. This is where I was super bullish. Go back to my Twitter feed. Go find the videos from those days. You'll see it. Super bullish. More bullish here than I was at this low. And I called this low perfectly to the day. I have tweets that prove it. But I was more bullish here than I was off the lows. Okay? Right here as well. These are the areas where I've been historically incredibly bullish. Right here. Breakout above the ascending triangle. Same reasons. Reasons don't change. Same exact reasons. Green star candle came right after. Was a little short-lived, but it was okay. pull back to the prior level of support, kept going. Now, here, I was not very bullish at any point. I was a little bit bullish off this low and a little bit bullish off this low, but not enough for me to put these things in. I was cautious. I'm always cautious at consolidation. Always cautious at consolidation. And the other time I was really bullish, but that was before I was public or anything. And that was just when I was starting to pay attention to Bitcoin, was right here. Again, notice the theme. The theme does not change. Same exact reason. Same exact reason. Right here. This was a big scare. Silk Road got taken out. Bitcoin dropped 20%. And immediately after that, it hit another MRI star candle after consolidation, after a top, and rallied to the upside, topped on an MRI weekly. I did not even know that. Reasons. Well, same reasons. They don't change. They don't change. Oh, all rising. This should be moving averages. Strong bounce off support, break to new all-time highs. Okay, at least at a closing basis. Good enough for me. Closing, all-time high on a closing basis is good enough for me. Or a critical swing high. These were the levels where I was super bullish. Okay? These levels. Notice a theme. It would have been here as well, by the way. But it's just, I can't draw too many of them. So I just put up historical areas where I've been as bullish as I am now. And this is an orange because I wasn't as bullish here. Only one of them am I calling the low. Everything else I'm calling extensions. Okay. The only lows that were perfectly called by me were here and here. The 1800, the 3000, these I called absolutely perfectly. I didn't call this low perfectly. And these I did much these I did much better on, but I was always cautious throughout this whole bear market. Now we come to today. Here we are again. We rebounded off a consolidated low, we pulled back to a level of support, and right now we are on the verge of breaking out. And it's matching fundamentals, on-chain, and cycles. It's all right there. Though the moving average picture is not great. For the first time, the moving average picture is not great, but that's okay. I'm forgoing the moving average picture, which is a theme across all of them, because all the other things lined up. Yeah, the weekly candle is not closed yet. We have four days to go. I'm aware. And if the candle closes as red, I will look like a complete idiot, and I should probably not talk about price of Bitcoin anymore. Where would I lower exposure to the 100% allocation? So I would lower it if it closes below both of these moving averages. So I would lower it if we close a 4-day candle below 22.5, I would reduce the exposure. People Swanee still around. All right, I want to jump into Twitter Spaces, guys. Do you think Bitcoin will follow S&P this time? I think it still follows it a little bit, but Bitcoin at the moment, Bitcoin is in a little bit of its own, right? Here's the 1 minute candle. What's going on? Where's my data? Let's do 5 minutes. I mean, is the data not functioning? Oh, there's data issues. Okay. Delayed streaming. The issue is on the exchange side. Okay, so it's not my fault. There's data issues. For now, Bitcoin isn't very correlated. See, for back to the whole Litecoin halving thing. A halving is a buy event for Bitcoin, but it's not a buy event for shitcoins. Which is why shitcoin shouldn't have halvings or mining for that matter. It only hurts them. All right, guys. On this note, I'm going to get going. Thank you for watching. Check out, if you're interested in learning how to trade, there's a free learn trading section on Vays.com. There is also paid courses, on-demand videos. They're not expensive, $500 for my technical analysis and risk management course. Options a little more pricey. And the MRI indicator, which I use religiously in my trading decisions. If you want to come to a financial event, we have the Financial Summit taking place in November in the UAE. And our Bitcoin event is in Las Vegas, Nevada, December 7 and 8. Don't miss them. They're both very limited capacity, and they both will sell out this year, especially as Bitcoin rises to a new swing high. You can check out our speaker list, working on a few more awesome speakers, and hopefully see you there. All right, guys, thank you all for watching, and see you all on the next one. No more packs to open. Where is... There it is. No more packs to open, guys. Next time. David, thank you for your super chat. Your trading seminars and YouTube videos have helped me make a lot of money. Thank you. Great. Congratulations. I'd like to buy you your favorite bottle of tequila under $300. What would it be? You know what? I'm going to talk about that next stream. So check it out next stream. Favorite tequila under $300? It's not my favorite because I've never had it. But it's called Tears of Lorena. They only make one bottle of tequila. It is approximately $300. And it's called Tears of Lorena. Tears of Lorena. It's a tequila I always wanted to try. And I have not gotten myself to buy it yet. The bottle, it depends on where you buy it. It could run up to $350. But it's in that $300 price range. All right, guys. Talk to you soon. Yeah, David, we'll try and connect. You got to tell me where you are. If you have that bottle and you're in my vicinity, I'm definitely coming over. David Anderson. See if you can message me somehow or tag me on Twitter. Say, hey, I'm David Anderson that wants to buy you a tequila.